Good morning, everyone. Happy Friday morning. We're just gonna let a few people stream in who are still in the waiting room. So I'll give it just 30 more seconds. Okay, great. Good morning again, everybody, and welcome to our first webinar this year, a NASCEE capacity building webinar on governance. And I know that when we hear the word governance, often it conjures up thoughts about our boards and how they function, maybe the board committees, maybe even our compliance with bodies like the CIPC or the Department of Social Development or even SARS, depending on where our registrations lie. And we may even think that governance also relates to human resources and staff remuneration and such issues. And yes, it's all that and much more. So governance can often feel like this big, hairy monster. And in many ways, it is the backbone of all of our organizations, big and small. And when NASCEE decided to run a series of capacity building webinars this year, governance was a natural first place to start. And I'm hoping that there will be more sessions that delve deeper into some of the topics we'll discuss today. So I'd like us to see this next hour as a high-level overview of what governance is about. And while you sit and absorb the content that you hear today, think about which of the aspects of integrated governance, as the ladies like to call it, are most critical to you and your organization now, and can be improved or worked on in the next year, and some others that I'm sure you'll suspend for the near future as well. And so with us this morning is a team of experts from PwC, PricewaterhouseCoopers, who will lead us into a presentation for the next hour. And at the end, we'll leave some time for some engagement through Q&A. So I encourage you, as you listen to the content, to please note your questions and any comments in the chat box or in the Q&A function as they arise, and we'll collect and make note of them and bring them into the conversation right at the end. And so I'd just like to introduce our speakers this morning. We've got three ladies from PwC, the first being a partner at PwC, Jayshila Mistry. And secondly, an associate director, Regina Erasmus. And the third speaker joining us is a senior associate at PwC, and that's Chandra Yuster. The three ladies will take different sections of the presentation, so I will hand it over to Jayshila. Thank you for joining us.
Thanks a lot, Sibongile, and welcome to everyone attending today. Hope you're all keeping safe wherever you are. In Johannesburg, it's quite wet right now. Hope you have better weather where you are. But again, I think, Sibongile, thanks for the introduction. You've done a great introduction for governance, but perhaps if I could go a little bit more into that before we kick off. I think, you know, governance is so fundamental, and it's great that you put us up front as one of the first webinars you have, because it's fundamental to any sort of business organization, and it's the cornerstone of a lot what's been what a company needs and you know, to build from. You know, quite often I deal a lot with NGOs. You know, a big part of my work is dealing with non-profit organizations, not government organizations, and very often I get people say to me, but you know, this is not applicable to us, it's only applicable to bigger corporates. And really what we've tried to do today is try and make sure that we show you all aspects of it, but like you said, you know, think about what's important for your entities. And mind you, some of the failures, corporate failures you've heard about recently is in this space. If you think about Cricket South Africa, for example, If you listen to news reports, very often they talk about corporate governance failures. So it's really important that you keep this top of mind as your organization grows and as you go about your day-to-day work. So perhaps if we just go back to our contents page, and I just want to share with you quickly what we will be going through, and it's really the key challenges we're seeing people face, and the integrated governance solutions we speak about. We'll cover at a very high level some of the key elements. And again, like Sibongile say, look at what's important to you or what you believe you need help around. We talk a little bit about the board, and because the board is the focal point, the tone at the top sets what happens at the bottom. We'll touch on a few leading practices and some red flags we see out there. Of course, we'll be driven by time and see how it goes. We hope to finish this in 45 minutes, and then from there, take your questions. So because we're so short on time, I'm going to go right into the presentation. And if there is something that is troubling you, or you can't hear me or see me, please feel free to put it in the chat box, and I'm sure my team will make me aware of it. And yeah, welcome to my home. I think we're all doing this virtually, so if my nephew does run through the doors, I apologize for that. But let's get started then. Chandra, you can move on. Okay, so perhaps if we start with the challenges we see many organizations facing, and I've put up front, not-for-profit organization and private companies. I appreciate there may be people from larger organization in the attendance today, but I think the focal area is this for this webinar. And so some of the challenges we see facing non-profit organizations is definitely a lack of funding, more and more so now with COVID, and companies are around the world, feeling that South Africa perhaps doesn't need as much funding. Outcome-based funding very often is what lots of funders want. Your burn rate versus your outcomes. Very often we say we're going to do X, Y, Z, but we are only able to do X in what we have, etc. Economic circumstances, notwithstanding COVID, things were already tough. With COVID, things have just gotten worse. And very soon you'll see how this sort of relates into governance as well. Petty fraud happening in lots of NGOs. I see it every day. I was on a call last night because of this happening in an organization. Petty fraud simply because of a lack of controls. And there you find, because delegations of authority perhaps are not where they should be, you finding those sort of issues. And what we find in most instances is a lack of a formal governance structure, because NGOs or even organizations are saying to us, but I'm not big enough to have a formal governance structure. I deal a lot with family businesses as well, and even family businesses through generations need a governance structure. So I make the point that it's important that you at least formalize parts of what you do in governance. Chandra, you want to move on to the next slide? Okay, so we spoke a little bit around the NGO challenges, recent governance challenges in sort of corporates. I won't go through all of them, but if you read some of these, you find these everywhere. People are dealing with these complexities. They have these issues. Right now, directors are very concerned about personal liability. What is my role? What should I be doing? Am I doing it right? Those are the topmost questions in directors' minds, CEOs' minds. What we found with COVID as well is that sometimes teams are not as organized as they think they should. They don't have the responses. Their response rate was very slow to what was happening. Directors perhaps lack the understanding of their role, and very often organizations grow much faster than what they can keep up, or the governance structures can keep up. So again, just some of the areas governance is an issue now. I know a lot of you would be saying, are you going to share the slides with us? What we've decided is that rather than sharing our slides with you, we'll put together a few pages in a sort of summary and share it with the audience, post this so that you have our contact details with you, and you also have a better feel of what we're going to speak through. So Sibongile said we speak to integrated governance, and I think that is really what is what we want to bring across to you. That governance is not an isolated area. It's not just about the board. It's not just about making sure I got my MOI right, I've submitted my tax returns, my PAYE is up to date. That is not governance. That is quite often just the administrative side of things. Governance is much broader than that. And whilst I appreciate that not all of it will be applicable to you, if you look at what we've put in front of you, and we're going to talk through it now, I think more and more you'll be able to relate to some of the areas, and you'll also be able to see how this then would flow into your business or your organization. And perhaps, if I'm able to at least create some awareness in your minds today, that would be great. And hopefully when you're there sitting, making your decisions or thinking about the way forward, you would keep some of this at the top of your mind. I think that would be great. So I'm going to hand over to Regina then to take us through some of this, and happy to take your questions in the question box in the interim, and we'll try and get answers to that at the end of this. Regina, over to you.
Thank you, Jashila, and good morning to everyone. As I see everyone introducing themselves in the chat box, I get very excited. We have been also involved not only in the governance space, but also in the higher education sector for a number of years. And I want to just reiterate that as PwC, we are very used to developing young minds into astonishing leaders. So I think there is a common thread and a common background that we share with the participants this morning. So depicted on the slides is PwC's view of integrated governance. And you will see that we look at this from a holistic perspective. And I'm going to just talk you through a few of the aspects thereof. So we do look at the 7 critical elements of governance. And in the next few slides, we will touch on some of what we regard in terms of that. But just going back, Chandra, to the house and explaining, we start off at the top layer, which is your board or your board of trustees or your governance layer within your organization, depending on how you have registered and how you've set yourself up. This graphic depicts a very larger organization, maybe more mature kind of governance process, but it's also typical for some of the smaller institutions to just think of, how does this apply to you? At board level, how have you arranged yourself? How are you thinking about the governance, for instance, of your finances, of your control environment that would typically be done in a larger organization by the audit committee on behalf of board? In the same instance, your governance of risk, your risk committee would traditionally take responsibility for that. In your organization, who is looking at risk and compliance? Same for social ethics transformation, the whole legitimacy question that you have to answer as an institution. We will look at that, we will look at your human capital and any other important aspect at a governance level. But then very importantly is then also the foundation of this house, which is the management layer and what we call the lines of defenses. So line 1 being the executive and management layer that takes first line responsibility for everything that needs to happen. In larger organizations, you might have a compliance section, internal audit, risk management that will assist this management layer around what needs to happen. And then your other assurance providers, like your external auditors, your regulators, or other assurance providers. I see there's a question in the chat box, and we'll go into the 7 critical elements of governance in a bit. But this is just an overall view. And what we find when we help our clients in the education space, in the NPO space, but also our public and private clients, is that they often are so busy effecting what needs to happen that there isn't a point in time when they stand back and say, but have we positioned ourselves, have we arranged ourselves for optimal success? And that is really what we advise our clients to say, have a look at how you have arranged yourself so that you can identify gaps and overlaps within this, what we would call the governance ecosystem. So I'm going to stop there, and then we can move on to maybe the 7 key elements of governance. So you'll see that I'm going to go through this at a high level because we have such a varied audience. And some of this might be very applicable to you in your environment, some not applicable to you. So if we look at the 7 elements of governance, first of all, we would look at your strategy and management, and that's really how have you set yourself up. So when we assist our clients, we will have a look at their founding document, like the Memorandum of Incorporation. We will look at your strategy. We will look at your enabling legislation, whether that's then the Companies Act, the NPO Act, the Trust Act, to establish how have you arranged and managed your governance so that it can assist you in what you need to bring off. That leads to the second point, your structures and your accountabilities. So that would be, how have you structured your board, and how have you, within the board, have the different subcommittees to assist the board in what they need to achieve. There's one thing from a very practical perspective that we have seen that could really add value in any organization, and that is making sure that your delegation of authority is defined, and that it speaks to the delegation from the governance structure into the layers of management. And you would be surprised to see how many organizations do not have that in place. And that, I think, is critical. Then risk and compliance, making sure that you're absolutely aware of the playing field of where you need to comply, where your major risks are. In terms of ethical leadership and culture, making sure that that tone at the top, which is so critically important, is filtered through from the highest level, the governance level, to every employee in the organization. Obviously, much easier in a smaller organization than a very large organization. And then sustainability and resilience. I think everyone has, within the past 12 months, been forced to reassess, relook at our operating models, at how we respond to what is happening, not only within the student communities, but also within the economy, and how do we change what we had anticipated to achieve in terms of that, making sure that that also then has sufficient attention. The next slide talks about transparency and disclosure, maybe to a lesser extent applicable to smaller organizations, but still something that you need to consider in terms of also maybe your King 4 compliance, if you are compliant to King 4 or aspire to be compliant to King 4. And then the last one, corporate citizenship, really your integration within the citizenship or the community within which you are operating, but also that, you know, license to operate. Why are you here? I think what is extremely important is that what we also see within the space is that many times the funders of the institutions will want you to implement certain of these aspects of governance, and in that way then have a more sound footing for giving the funding to the NGOs. In terms of operationalizing governance, I'm just going to show you one example of the different layers of governance, and to think, you know, this looks like a very simple example, and it is really, but you will be surprised to see that not all organizations has thought around at board layer. How have we structured ourselves? How do we interact with the various stakeholders? At executive layer, how have we arranged ourselves? And at management layer then, how does all of this cascade into an organization where we are absolutely sure of what our strategy is, and what our performance aspirations is as well. So, you know, the premise is this: good governance has stakeholders at its core. And I think that is very important in terms of how we also lay out the lay of the land and how we engage with these stakeholders. If we go to the next slide, Chandra, Jashila is going to give us a few comments on the importance of the board as a focal point in governance.
Yeah, thanks, Regina. I don't see any questions coming through, so I'm hopeful that you're listening to us intently, and we are quite clear in our message. So, but perhaps, you know, one of the areas and the focal point is the board. And no matter how big or small the organization is, you need to have that layer there. And so we thought we'll dive a little bit into this area of governance. You know, there's lots of areas we can do, but this is what we thought we should. And, you know, the key questions really we find boards should be asking themselves, you know, is number one, are they asking the right questions from management? Are they getting the right information? You know, are they doing things the right way? You know, are they aware of what their roles are, what their responsibilities, and just overall, are they doing the right thing? You know, and if we look at a closer look at the board, you know, and you look at all these roles that board members need to play for their clarity, you know, for their own effectiveness, you'll see, of course, you know, the board is fundamental to how the rest of the organization works as well. And we've put up a structure there, and it looks complex, perhaps to an extent, but being a board member and leading an organization is complex. It's not difficult. It's perhaps not difficult if you have the clarity. It's complex in an ever-changing world. It's even more complex. But, you know, if you get your governance right, as a board chair or sitting on the board, you will be able to almost say comfortably know that you've taken care of all your risks and everything that goes along with it. So, you know, this diagram on this side, just on the screen, just shows you around all that the board should be looking at, all the challenges, the decision making, stakeholder engagement, you know, just all your roles development and succession planning, we find often doesn't happen. What is your real purpose? Do you have a purpose, or do you just operate saying, I have these funds from funder X, they want me to do this, so let me take that funds and make sure I run that program correctly? Or do I say my purpose is actually I want to look at early development for early childhood development, or and how do I actually actively then go for my strategy as opposed to just waiting for the funding we have, and then of course your composition and structure. Do you have the right people on the board? Do you have someone who's aware of finance? Do you have someone whose IT knowledge on the board is good? Everything is going digital these days. I spoke about my nephew whom I might run in. He's doing virtual schooling. So do we have someone who understands that? And then I think also role clarity. What is my role? Do I know what needs to be done? If not, who do I ask? Where do we get that sort of information from? And maybe as a board, then make sure that we understand each of our responsibilities and what we should be doing. Does the board meetings have the right agendas? Do we discuss the right things, or is it sort of a rubber stamping exercise? So boards have a very focal point, and these are some of the things that board members should consider, whether you're sitting on a large multinational, on a JSE listed client, or a smaller private company, and even your NGOs. This is something that board chair people and board members should be thinking about. Chandra, you can move on. Regina, I don't know if you want to add something there.
So no, I was just thinking, Jashila, and when we help boards to be more effective and to really be more agile, it is amazing how even long-standing boards that has been in place for a number of years and are really performing very well can still improve in some of these areas. And we assist boards in identifying those areas and crafting the way forward so that there is a continuous improvement in terms of getting to the next step, making sure that we are as effective as we can possibly be in terms of helping the organization achieve what they are setting out to achieve.
Chandra? So, we've put up a slide around legal duties of directors, and I'm cognizant that not all attendees today may be directors, but equally as much, we've put up the definition of a prescribed officer, because very often in NGOs you might not find that you don't have too many directors, you have a bit of a different structure, but suffice to say that prescribed officers also have a role to play within an organization. We always talk about directors. We know what they are. They're a member of the board. The Companies Act goes into a lot of, shall I say, it extends on what directors' duties, etc. are. But the prescribed officer is often not shall I say, as highlighted as it should. And the definition, as you can see there, it means a holder of office within a company or organization that has been designated by the minister. Now, when you talk about that in not-for-profit organizations, it also gives you an idea on what prescribed officer would be. And really, if you look at it in a lot more detail in terms of the schedules, it's anyone who has a decision-making role and some sort of authority within the organization would be cast into the net of prescribed officers. So, I think it would be naive for people who run organizations to say, I'm not a director, so I'm actually not going to have any liabilities. I think, that is not the case. We all have an important role to play in this. So maybe just some of the legal duties of directors and audience. So not everyone may be directors, but a lot of you may be advising directors or advising your boards. Just to take note of some of the legal duties of directors. Of course, it's the duty to act within your powers, but then it's also to promote the success of the company and exercise independent judgment. I think that's a very key part, exercising that judgment That's why you have a board member. That's why your directors are very often looked up to. You should be exercising that judgment, and above all, exercise reasonable skill, diligence, and care. And often we get the question, so what is reasonable? And I think that's a topic for another day. But I think we all grow up with knowing what's wrong and what's right. And if something doesn't feel right, if something you wouldn't like to see in the newspapers tomorrow, then it's not right. So always apply that judgment to what you're doing. Avoiding conflicts of interest. More and more we see conflicts of interest happening, and very often it's not just direct conflicts of interest. It's what is perceived to be a conflict of interest as well. So the concept has become more deeper in current times. I think it goes without saying not to accept benefits from third parties, and of course declaring everything that's happening. I think if you have the slightest doubt as to whether you should declare something, then you should declare it. If it's not going to be valuable, then it's fine. It's noted. Everyone knows it. It's out in the air. So the transparency element is very, very important for directors as well. And if you use some of this in your armor by being a director, you're able to make sure that you're on the right side of things, but more so you're able to promote for the better success of your organization as well. Chandray, you want to move on? And Chandray, Regina, you can chip in whenever you want to. So governance really is, you looked at from different angles. There's, of course, the Companies Act. So a lot of you may not be companies, but you may be not-for-profit companies registered, etc. So the Companies Act is still applicable to you in some ways. But governance is really, at this stage in South Africa, King 4 is a big driver of what good governance should look like. And whilst you can't look at all the elements, King also has a very specific area in there in the whole document for NGOs and NPOs. But I'm going to hand over to Shan to speak to some of this King 4 areas. Again, King 4 is not legislated, but it is best practice. And more companies are saying, well, we're not that big, but we want to be on the right side of things. Let's look at how and where we can implement King, or at least let's think about what we should be doing. So Chandray, over to you then.
Thanks to Sheila, and once again, good morning to everyone. So I don't think we will go into too much detail in terms of King 4. I also think that it's quite a vast document and gives, a vast amount of guidance to organizations. And we, once again, do assist with this and assist organizations to see, where are they in terms of King 4 and embedding these principles and recommended practices within the organization. Just about, one key thing that I would like to just emphasize is, what is King 4 trying to achieve? If you say you're aspiring to instill, the principles and practices of King 4 in your organization, what are you trying to achieve? And there are 4 main governance outcomes that King 4 would like companies to achieve at the end of it. One of them being ethical, instilling an ethical culture in your organization. And I think once again, Regina and Sheila have mentioned this in the during our conversation today, is no matter how big or small your organization is, you can instill ethics and values within your organization. This is usually driven from the top, so from leadership downwards, and a very important aspect to consider and to achieve governance within your organization. The next would be good performance. So it is important, for your processes to be working, for your policies to be in place, and for organization to focus on embedding that foundation to guide employees in regards to how they practice. And then the next would be in terms of legitimacy and also effective control. So we spoke about good performance, and previously we spoke about risks. So risks is obviously threatening whether your organization is small or big, and if instilling effective controls in your organization assists and provides your governance structures that risks are being mitigated within your acceptable level. Regina, I don't know if you would like to add something in regards to King 4.
No, so Chandra, I see that there's a lot of questions coming in, and thank you very much for that. We are going to deal with those questions at the end of the session. I just noted that, some of it relates to the challenges that especially NGOs are having in terms of instilling good governance. And I think one thing to remember is that it is a journey, and that whilst it will be difficult for some institutions to achieve everything that you would regard as leading practice, those 4 critical governance outcomes is really what every business is aspiring to. An ethical culture, good performance, good control within the business, and a legitimacy and a placing within the landscape that makes a difference. And I think that that is especially an important part for this audience. The next slide, Chandra, did you want to give a few perspectives on the King Code versus the Companies Act?
Yeah, I think just in terms of timing, I think I'll just move to the red flags. In terms of our questions, and if anyone does have further questions in regards to this, I think an email or just a contact session would be good. So I'll just move on to the red flags. So I think there are a lot of red flags, that have contributed to governance failures within organizations, or could alert organizations that current governance structures in place are not working and achieving the desired result. I think we have summarized it into a top 10, or what we have most recently seen within organizations. And the first one being a dominant CEO. I think in terms of a dominant CEO, this can be sometimes be seen as, it has its pros and cons. But especially with the board, I think it gets conflicting when you do have that dominant CEO and he or she doesn't provide the board with the space to make those decisions for the organization, and so on. And then also in terms of unhealthy board dynamics, I think we do see this a lot at our clients at times, and this just means the board is not cohesive. It's very important for a board to be able collectively to have open discussions and constructive debates. And we see at times that there are board members that are reluctant to express all views are not respected, or the chairperson is struggling to facilitate that constructive debate. Another one would be expertise of the board is not in sync. It's very important that yes, you do have a diverse set of skills on the board to really bring in from a accounting perspective, legal, and then also that industry specific expertise on the board. But it is important that these expertise collectively sync one another and complement one another. I'll just move on to the next slide, which would be to that there are organizations that have weak assurance functions, and like Regina mentioned previously, that the board can't do it all by itself. It does need subcommittees and also that level of assurance provided and reported to the board in regards to what is happening in the organization, and the board needs to be able to trust this assurance. So if that is weak, it does really hinder on the overall governance and optimal governance within the organization. The last one that I'll just address today would be board packs not being fit for purpose. So in order for the board to make informed decisions and to have those robust discussions, it is very important to have information that is fit for purpose, quality information, and we also usually speak about sufficient information. And at our clients, we also, it's a question that we ask a lot and speak about is, we don't want to provide, getting that balance of providing, the appropriate amount of information to the board, but also not providing too much information. So, if the board is overwhelmed with too much information, it really they struggle to then, focus on significant matters within the organization. So these are just a few key things to keep in your mind to reflect later and see whether you guys are struggling with, do you guys have these pinpoints within your organization or red flags? And then just to take a deep dive as to how this is impacting optimal governance within your organization. So yeah, thank you, Joshila. I think just for closing, Regina and Joshila, just a message or anything that you guys would like to add. Thank you.
Yeah, thanks, Chandray. Maybe I'd like you to put on the screen the house picture so that people can continue looking at it, because I think that's the cornerstone of where governance is and what we should be looking at for governance. So thanks, Regina, Chandray. I think we've made it within our allocated time, and attendees, I do apologize if we've been going fast through something, but really this was just a taste of what governance is about. And if you've had one or two light bulb moments in your mind, then I think I've done a bit of my job, especially when it's so critical that we have good governance in our country right now. Organizations across the board. There are some questions, so Sibongile, if you don't mind, I'd like to run through the questions because we still have some time, if I'm not mistaken, and between Regina, myself, and Chandray.
Yes, we have, about 15, 17 minutes. So thank you very much, ladies. This was quite informative, and I've noted the questions and we'll go through them in an order that I've kind of arranged so that we don't miss anything. But I just wanted to address one question that keeps coming up around sharing of the slides. This session is being recorded, so that is something that we can share in terms of the recording. But the slides themselves, do you want to address that, Joshila? Because I saw that you answered.
Yeah, so Sibongile, some of it is our intellectual property, some of it we use when doing our work, etc. So, whilst we won't provide the slide deck in full, I think we'll do a good enough summary that would be useful to you, and then perhaps also address some of what we may not have got in today. It may be 3 or 4 or 5 pages. It will have our contact details as well, but I can assure you that it will cover most of what we spoke to today. Just the layout, etc., might be slightly different.
Yeah, much
to share the recording with everyone that's attended, I think.
Much appreciated for that. I'm sure that will be useful. So let's just get into it. And you have a slide here that I think there was a question from around the integrated governance framework and the list of the 7 critical elements of governance, as well as the board committees. And we had a question earlier just about, which of the key or which of the board committees would be key or critical for a small organization. So of course we have a mix of organizations here, but if an organization's starting out and maybe in their first 5 years, which of these would be critical to them?
Yes, so thank you, Sibongile. And I think it would be very specific to the organization. What you might find in a smaller startup is that initially the board could actually cover what needs to be covered. So what would be critical, in my view, the governance of finance, the governance of risk, making sure that the strategy versus the performance is attended to by a governance structure. As the organization grows, you might find that the board would then want to have a subcommittee that can delve into detail and report back to board. So I don't think there is a stock standard answer to say, you know, you must have at least this committee or that committee. Yes, if you are you know, a public company, then there are certain requirements for you to have an audit committee, to have a board of a certain structure. If you are in the NPO space, then you have more leeway to set it up that would bring the most value to the organization.
Yeah, thank you so much, Regina. And I think also it's to consider the size of your board and the expertise that also lie on your board and what's critical for you. So it sounds like you know, an audit committee or a risk committee would be critical. And when I look at these 6, you know, I think human capital and remuneration committee might even be conflated, you know, when you have fewer people on your board. For our board at the Learning Trust, we've got individuals that may be assigned to each of the roles as well. So one person on the board that, you know, I can always bounce things off of to do with human resources, for instance, or to do with finances. So for small boards, I think that could work as well. We've got a few other questions, but I just wanted to just mention something that you say here around a dominant CEO. Who maybe doesn't provide the board with the space to make decisions. And I wonder if you have any thoughts around, you know, a dominant board. You know, I've heard people talk about their board members overstepping, and how do boards and executives know where the lines are and what the responsibilities of a board are versus those of an executive director or a CEO?
Thank you, Sibongile. I'm going to ask Jeshila also to give her perspective, but from where I am sitting, we spend a lot of time in interacting with directors to make them understand what their role is. You know, the whole noses in, hands off principle. And that would be, I think, step 1 in ensuring that everyone understands their role, that those roles are clarified, and that your delegations of authority actually underpins what can and cannot happen within the organization. Jeshila, your view?
Yeah, I think, Regina, you've covered it. I think number 1 being, you know, training or board members knowing what their roles and responsibilities are, you know, especially if you have independent board members, you know, they should know where their space is, etc. And if I think board members understand their roles and responsibilities, generally it does become easier. You find very often that boards are a mix of very skilled directors or seasoned directors and very new directors, you know, and I think it's for them to find that appropriate balance there. And then all committees, etc., boards would have terms of reference documents, charters, delegations of authorities. You know, these things could also then clarify more the roles of each of the players in the group. And in NGOs, often you find there are not many independent directors because, yes, you can't find people who want to volunteer for it. You don't always have the funds to have an independent director. But, you know, to then make sure that when you're sitting at that board committee, you also have an independent view and not be sort of, I almost want to say, shackled with what's happening in operations to a big extent. So, you know, very difficult. Of course, personalities is not something you can control, but if you can create a bit of almost want to say clarity, it does give some structure to how your boards run. And of course, we often also do board evaluations. In fact, that's the flavor of the season right now, where you're doing board evaluations or you do a self-evaluation as a board. And often that also brings up to board members whether they are staying within their limits, whether they are not working correctly, or what they think of each other and what they think how the board's running. I think that's an effective way to also gauge how boards are functioning.
Yeah, certainly. And it makes for a good working culture and I suppose relationship building when you can do self-evaluations, get to understand each other's experiences, skills and competencies, which goes to a question I think that Komala asked about, if you have any advice on the skills, competencies or experience that must be present on the board to ensure good governance. So, I think many a times, especially when we register organizations, boards or directors, if you have to have like, a minimum of 3, for instance, for registrations, can be such a ceremonious role, right? So I just have the 3 directors registered and none of them actually even know their role, and I don't even know their skills and experience and what they can bring to the board. So I don't know if you have any advice, about how to constitute a board and what are the competencies that you want to consider.
Yeah, so maybe if I can start by saying, not all board members necessarily need to be directors, and boards are able to then make sure by invitation they bring in the required skills if they don't necessarily have it on their board. So if you have a board of 4 members, you might find you don't have all the skills, but some of the critical skills that any business or any organization would want, of course, is a finance skill on your board. These days, everything is technological, or technology is ahead of us. You might want to consider that. Those are some of the critical skills that you need, and how but then again, the skills that you don't have, you can invite people to your committees to give you experts to look at these sessions, look at what's happening, etc. So you don't necessarily need to have an inflated board with 12 in there. I think you as a board should know what your limitations are. And for example, when it comes to a technology matter, say, we don't have these skills here, but we know X and Y who's sitting on the ground that has it. Let's question him. Let's see what's happening. Let's see if we need the use of an expert. So you can bring in those sort of skills. I think just getting an overall understanding of how the organization works and what it needs is important. And it's important for board members to know that, board members need to know what is the purpose of our business, and what is our strategy to meet that purpose, and have we put in, so yes, a varied group of skills is always advisable. If not, make sure you get those, or you can consult with people, etc. But making sure you get the basics right is important. Regina, I don't know if you want to elaborate a little bit on that.
Yes, no, absolutely. I think your starting point is, looking at maybe the skills matrix that you would need for the business, plotting your board members against that. The question also talks about, to ensure good governance. And here I would put a word of caution to say that you can have the best directors, the best frameworks, systems, and fail in terms of governance because of individuals not doing the right things right. And I think that's a very important distinction. So, and it almost puts us in the framework to say, well, be very careful of, the integrity of the individual. Yes, skills, experience is of utmost importance, but is valueless unless integrity is present.
Yeah, that's such an important comment that you make there, Regina, just around values and your board knowing what's important, which are all the things that will ensure good governance. And what you said there, Jayshila, about the skills on a board. One other thing I would add is, as you say, you don't have to inflate your board to 12 people just because you're bringing all the skills onto the board. But I've seen some organizations also constitute some sort of advisory board or council, or a few people that an executive director or CEO might elect onto this advisory council to advise them directly. And that's another way that you can avoid inflating your board unnecessarily. And coming back to the question of good governance, someone asked the question here, and I think it was Komala again: how reasonable is it to expect that financial auditors will pick up on possible governance issues or suspicious transactions and the like? So how much should you place in the hands of auditors annually when they go through your books?
Yeah, maybe that's my area where I work in. So just my background, I do core audits. So really the audit of financial statements, and I think about 20% of my portfolio is actually NGO audit. And finance auditors look at financial. They literally financial auditors. So making sure your rands and cents tie up, making sure that there's not fruitless expenditure, etc., making sure that the relevant people have signed off on it, the controls are in place, etc. But governance is way beyond just financial and finances. Governance is about other things as well, ethics, risk and compliance, sustainability, strategy and management. So they will not necessarily look at your governance structure. They will look at all elements relating to your financial statements. Are your financial statements fairly presented? When they test controls, do those controls ensure that the numbers that land up in your financial statements are correct? So they won't typically look at all the other aspects of governance. It's unlikely. It's not a reasonable thing to say that, I've got auditors, so governance structures is correct. No, your financial statements may be correct, but not necessarily your governance structures, because an auditor will never say to you, your strategy is wrong, that's why you're not making profits. That's not his agenda, and I mean, I do this all the time as an auditor. I give you a report to management. All I'm saying in it is you haven't submitted your VAT returns on time, your property, plant and equipment's not tagged, you haven't looked at residual values, etc., but I'm not talking to the other parts of the business. So financial auditors will not pick up on possible governance issues. Suspicious transactions, again, an audit is not focused on picking up fraud, but they give you reasonable assurance that they've looked at some of those areas. Again, a financial audit is not a forensic audit. So they will possibly pick those up, but there's no certainty that they are going to pick that up. And very often that's the miss. I almost want to say the perception of what auditors should be doing and what auditors actually do, that causes some of that confusion. I hope I've answered your question, Camilla.
Thank you so much for that answer, Jayshila. There's a couple of other questions that have come in, but I'm mindful of the time that we are kind of 1 minute away from ending our webinar. And someone, I think, earlier made a useful comment about suggesting that NASCEE has sessions of about 45 minutes where NGOs can share their key challenges, and maybe we can share some solutions that they can put in place to anchor best practices. And I think while this is the first of our capacity building workshops, it would be useful if we can gather feedback and input from the participants about what they might like to see going forward and which areas they'd like to zoom in on. And it sounds like governance is quite a critical one. And maybe if we can take just one final question around, and I find, a lot of organizations have questions about this, and I don't know if you might have a good answer to it, around fundraising and the board's role. Should board members raise funds for NPOs? Is there usually one board member who assists with fundraising? And of course, these issues can have geographical differences. So I know in the US, for instance, you know, they say to board members, you give or get, or you get off. You know, board members are required to put money into the organization or to get money, or otherwise they get off the board. But we don't have such a culture in South Africa. I don't know if you have a few words for NASCEE around fundraising.
Yeah, maybe just very briefly, you know, if you look at our governance house, you see an investment committee there, but in NGOs, that would typically be a fundraising committee, you know, and what we find is very often you may appoint a board member to look after that committee, but then draw in all other members from within the organization, your CEO, your CFO, or particular people who've been designated to look at fundraising, to be part of that committee. But, you know, there's no line to say that board members should not be involved in fundraising, because you are very often the face of your organization. So, you know, you're able to cross those lines, but within boundaries as well. So it's you know, your question asked, should board members raise funds for NPOs, or usually one board member? I think it's a combination of that. Because an organization is not made of one individual, an organization is made of multiple individuals, but it's always nice to have an investment committee, or in your case, a fundraising committee, which doesn't necessarily mean all board members. You may have one or two board members and then members from the rest of your executive staff, etc., to help you with strategizing and also help you raise funds.
Thank you so much for that last comment, Jayshala. And as I said, we've run out of time for this webinar. It's been a very useful one, an informative one. But as I said, NASCEE will think a little bit more about how we can zoom into some of the key issues that you raise here. And then I also know that you're going to share your contact details. Regina, I saw that you shared your email address with Lisa Rossi. And yeah, there's a slide there. So if you can, before you leave the webinar, just note some of the contact details, and reach out to these wonderful ladies from PwC to help us with some of the areas that you might be struggling with. Any last words from you, Regina, Jayshala, or Chandra before we close?
Nothing else, given the time. Just to say thank you very much for your attendance. I hope I've created some awareness, and remember that governance is fundamental and it's the foundation of your organization. Thank you.
I'll confirm that, and happy to have subsequent discussions and to help some of your members in terms of moving forward. Thank you so much.
Yes, thank you so much, ladies, for being so graceful and so generous with your time. And also to everybody that's attended, thank you very much. We will probably, send some follow-up materials, as Jayshala noted. And if you have any questions and you need, some guidance and direction, also feel free to post those to NASCEE just by emailing info@NASCEE. Thank you, everybody. Have a good rest of your Friday. Cheers.
Yeah.
Thank you.